Yeah, good morning, everyone. So, Friday, US market turned positive after a few days of negative before that, mainly on account of uh, more of a reversal of trade or a short covering. Going forward, the concerns are that the 40% of the Dow component results are likely to be there in this week. So people are more concerned about those results, whether how it will be moving, and at such day people have reduced their short positions, and which has taken the market up on the Friday. And also the expectations of rate increase of 0.25 has increased substantially. Almost around 99.7% our expectation is that the interest rate by the Fed increase will be of around 0.25. The meeting is on 31st Jan and 1st Feb. So that will coincide with our budget. So that is also had impacted the US market. Futures are more of a flattish, and Asian market are indicating some positive positive trend today morning, and I think even the Indian market can also take a positive clue from these directions. Apart from that, commodity market are more of a flattish and not giving any directions. Oil is at 87. Iron ore has increased by around 0.5%, and steel is more of a flat. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, the market is likely to open with a gap up opening, and we are likely to witness some positive move during the day. As of now, for the today intraday purpose, Nifty has immediate resistance at around 18,130 level. If it surpasses that level on the closing basis, then it's likely to extend this pullback rally towards 18,200 to 18,240 levels. On the flip side, the immediate support will lies at 18,000 psychological mark. Any move below that will likely to witness some profit booking, which might take a Nifty towards 17,900 to 17,800 levels. The view will remain a cautious because on high side we are witnessing a profit bookings. As long as Nifty stays above 18,200 levels, a pullback rally can be witnessed. If it's break that level, on the closing basis, then this cautious trend would be turned into the bullish trend as such. But till the time, small pullback rallies can be witnessed into the market as long as Nifty sustains above 18,000 psychological mark. Coming towards the bank Nifty, for today intraday purpose, 42,730, 43,000 are the two resistance level we need to keep eye on it. On the low side, 42,300, 42,000 are the important support levels we need to keep eye on it. Coming towards the Nifty Finance, 18,840, 18,920 are the resistance level. On the downside, 18,700, 18,600 are the support levels we need to watch it. Stock specific, one can keep an eye on Wellcorp. This particular counter is really doing very well on technical setups. It's on the verge of giving the breakout of 227, 230 level is the breakout level. Last week it has maintained a positive closing nearby the breakout level itself, that is 226 level. So one can take a long positions. It will be a conditional buy call. One can take a long above 228 levels. If it's break that level, then this pullback rally is likely to be extended towards 215. So one can take a long position at about 228. Stop loss can be kept at 215 for immediate target of 250. That's it from my side. I request derivative team to take a call for.
Yeah, thank you, Swati. On the derivative front, last 10-15 days, not much has changed. Data is a little bit up and down. The PCR continues to oscillate in between 0.75 and about 1.15 odd. One day it shoots up and the other day it comes down. So that's what's really happening. Nothing much to really judge from here. Open interest has moved up. Now we have come into the expiry week. So more or less, you're going to see Nifty moving up and down in between this range of about 17,900 and about 18,200 to 50 odd. 18,100 has the highest call and put base both. So yeah, we are opening around the 18,100 levels. Don't expect much buying or selling to come in Nifty. Also, there is budget in the next week, so don't think some actual trend will come in. But yes, the VIX has decreased from 15 odd to 13 and a half odd. That is set to rise in this week. So VIX might rise, in the later part of this week. So look out for the same. There can be sudden, whenever Nifty is up, like it is today, there can be sudden falls, and when there is a huge fall, there will be sudden spikes, and that is how the VIX is really increases. So look out for the same. Keep proper stop losses. Uh, from the stock specific front, you will see good action now again in the PSU stocks. IRCTC, Coal India look very good from current levels. Even ONGC, they are set to rise. There was some bit of buying in FMCG stocks in the last week, but don't think that will sustain. FMCG as a whole doesn't look that great at this point of time. Um, so if you have FMCG stocks in your portfolio, look to book out in this rally because most of the stocks are likely to come down. Uh, yeah, so that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Many banking results have come over the weekend, so we will quickly discuss. Bandhan Bank result was in line with expectation. Gross NPA was flattish at 7% despite sale to ARC. Although SMA 1 and 2 put together has come down from 8% to 4.7%. If we see the geographical diversification, the MFI portfolio remains vulnerable with West Bengal share still at 36% of portfolio and Assam at 8%. And if we recollect, even in IndusInd con call, they had mentioned that the Eastern India MFI portfolio is facing stress. So don't expect any sharp recovery in Bandhan Bank. Stock is also trading at 2.2 times price to book, so we remain neutral. RBL Bank result was in line. Asset quality improved in MFI and wholesale segment particularly. Although the problem with the bank is now not so much asset quality, but the cost to income ratio, which remains sticky at 68%, and that will be the key hurdle to increase the ROA going forward. ROA is likely to see gradual improvement as loan growth accelerates and cost to income can come down slowly, with the credit cost declining further. Overall, we believe that asset quality issue is now getting resolved and trajectory is improving. Bank has been able to deliver an uptick in loan growth. If we look at on sequential basis, the loan growth was 6%, which is encouraging. So we expect that from the current level, last 2-3 quarters, the ROA has been stuck at 0.8%. We feel that in FY24, the ROA can touch 1%, and stock is trading at 0.8 times price to book. We think it will re-rate to one time FY24 book value, which is 240 rupees. So there is a decent upside over here. Outlook is positive. ICICI Bank result is marginally below expectation because of higher slippages, which came at 2.4% versus expectation of 1.9%. Even sequentially, the figure was 1.9%. Also, bank's credit cost was higher than expectation as the bank has changed its provisioning norms, which made them more conservative. However, stronger NIMs and lower OPEX gave support to profits, which grew the profit before provisioning, which grew by 34% and 10% sequentially. Bank said that retail and SME segments are doing well and growth will continue in these two segments. However, on the wholesale side, demand is restricted to few segments such as government PSUs, real estate and industrials. So wholesale growth may moderate going forward, except for these 4-5 industries which are still going strong. So we remain positive in long term on ICICI Bank. IDFC First Bank result is marginally above expectation. We have seen this trend that since last 3 quarters, IDFC First has been giving improving set of numbers. Loan growth was 5% sequentially, 26% year on year. Loan book is at 1,47,000 crores now. NIM continued to improve to 6.4% against sequentially 6%. Credit cost has stabilized at 1.2% level, and ROA continues to inch up about 4-5 basis points each quarter, now at 1.1%. However, stock is trading at 1.7 times price to book, which seems to be fairly valued in the near term. Although on long term basis, we are positive on IDFC First Bank. Kotak Bank result was above expectation. Loan growth and net interest margin was good, but that was marred by elevated OPEX, which led to inline operational performance. However, asset quality beat our expectations. Loan growth was strong at 6% sequentially and 23% year on year. NIM also expanded around 30 basis points to 5.5%. Slippages came below expectation at 1% against sequentially 1.3%. And also from the commentary of the management, it was indicative that from being ultra conservative before COVID, management is now becoming aggressive. The unsecured credit, which is credit cards, personal loans, consumer durables, registered strong growth, and management expects to gain further market share in these segments. Management also reiterated that unsecured credit, which is these loans, is the share of them is likely to inch up to 15% next year, which will be margin accretive. So ROA for the quarter, which has reached 2.5%, has further scope for improvement. So this is a very commendable job that bank has done. We remain positive on Kotak Bank. Yes Bank result was below expectation. Credit cost came at 1.8% versus expectation of 1.1%. Even slippages increased 3.3% against sequentially 2%. Gross NPA and net NPA, however, declined sharply to 2% and 1% as bank has transferred a substantial amount of 43,700 crores of stressed assets to ARC company JC Flowers. But even then, if we look at the net stressed assets, which is post provisioning, the net NPA plus net restructured plus SMA 1-2, that figure remains high at 8.6% of total loans. So still there is stress. Management indicated that bank is in process to appeal the Supreme Court against the recent High Court order that caused the write-off of additional Tier 1 bonds issued by the bank. So stock is also trading at 1.5 times price to adjusted book. For ROA, which is negligible, just 0.1, 0.2%, it remains in that range. So we remain negative based on the recent developments also. HDFC Life Insurance result was above expectation. Exide Life was merged this quarter, so numbers are strictly not comparable with prior quarters. The VNB, however, came ahead of expectation by about 10 odd %. And stock is trading at 3.4 times market cap to EV. We are positive from long-term perspective. SBI Life result was in line with expectation. APE growth was healthy at 19%. VNB grew by 9% due to some marginal moderation in VNB margin from 31% to 30%. Stock is trading at 3 times market cap to EV, which seems to be fairly valued. From long-term perspective, we are positive on SBI Life. Thank you.
Good morning, everyone. LTI Mindtree has posted its result on Friday, and the company has posted declining set of numbers for the quarter, with CCQOQ growth coming in at 1.9%, dollar revenue coming in at 1,047 million, impacted due to furloughs, and growth is expected to accelerate in Q4. The company has order inflow of $1.25 billion. EBIT margin stripped by 360 bips QOQ and came at 13.9%. One-time impact of integration cost of 100 bips is majorly baked into Q3. On demand front, management indicates there is a delayed decision making by the clients, but there is no cancellation. On overall, management indicates of having industry leading growth and coming back to industry leading profitable growth in Q1 FY24. The company is also targeting 200 bips improvement in margins over next 4 to 5 years due to synergy benefit. This is additional to the aspirational industry leading growth target of FY24. Stock is trading at 27.2 times FY23 EPS. Outlook is neutral on the company. Thank you.
Good morning. JSW Steel reported inline set of numbers. Volume stood at 5.63 million ton versus 5.74 million ton sequentially. EBITDA per ton stood at rupees 8,074 versus 3,052. EBITDA for the quarter was impacted as the company incurred FX loss and inventory loss worth rupees 984 crores, which impacted EBITDA per ton by rupees 1750. Management has revised its production and sales volume guidance to 23.6 million ton and 22.6 million ton respectively. The shortfall balance of 1.4 million ton guidance is for the US and US operations and JSW Ispat combined. Exports going forward will be in the range of 10 to 25% of total sales. Although steel realizations are expected to be higher in Q4 in line with global steel prices, whereas input costs are likely to remain flattish to range bound in Q4. The impact of higher iron ore cost and marginal increase in coking coal cost will be seen in Q1 FY24. With the recent up move in the stock, valuations are now demanding with the stock trading at EV by EBITDA of 7 times FY24. So we are neutral on the company. Ultratech Cement result was in line with expectation, although sales volume was higher at 25.9 million ton versus 24.7 million ton expectation of 24.7 million ton. Realizations were below expectation at 6,000 versus expectation of 6,154. EBITDA per ton stood at 903 versus expectation of 949. The company has its con call today, wherein further details are awaited. Thank you.
Good morning. Aether Industries Limited has reported the result, and result has improved for the quarter. The revenue reported at 167 crore, which grew by 11% YOY, and EBITDA margin came at 28.3% versus 25.9% in the same quarter previous year. As as discussed in the con call, the company has launched the Site 3, which is a green manufacturing facility for the production of 5 molecules, of which 2 molecules are already commercialized. And these products are expected to be used in the production of APIs. And Aether is the only manufacturer of these molecules in India. So next 2 plants, that is Site 4 at Surat and Site 5 at Panoli, are both advancing well. Company's R&D expenditure stands at 7.7% of revenue plus capital expenditure. So this large capex plan is based on the favorable customer inquiries and the strong product pipeline in R&D. And company is expecting EBITDA margins to improve up to 30% from the next quarter onwards on account of improved raw material prices. Currently, the stock is trading at a PE of 61.4 times of FY24 EPS, which assumed to be fairly valued. However, outlook remains positive over the long term. Atul Limited result was reported below expectations. The revenue reported at 1,268 crore, which was degrew by 8.1% YOY. EBITDA margin came at 13.6% versus the expectation of 16.4%. The stock is currently trading at a PE of 27.1 times to FY24 EPS, and outlook remains negative over the near term. The DCM Shriram Limited result was reported okay. The chloro, vinyl, and sugar was segment performance was declined, whereas farm solutions, seed, and fertilizer segments were improved. The revenue reported at 3,236 crore, which grew by 18.5% YOY. EBITDA margin came at 17.1% versus the 21.6% same quarter in the last year. The stock is trading at a PE of 12.3 times TTM EPS, and outlook is neutral for now. For the Megmoney Organics Limited result was declined. The revenue reported at 549 crore, which degrew by 14.2% YOY. And EBITDA margin came at 9.6% versus 12.2% in the same quarter last year. The stock is trading at a PE of 9.4 times to TTM EPS. Heritage Foods Limited result reported below expectations. The revenue reported at 786 crore, which grew by 17.8% YOY. The EBITDA margin came at 4.1% versus the expectation of 5.6%. This was largely due to flush season which was adversely affected the ongoing lumpy skin disease and the prolonged monsoon season in South India, which kept the pressures on the milk procurement prices. The stock is trading at a PE of 6.6 times to FY24 EPS, and the outlook remains negative. Dodla Dairy Limited result has declined. The revenue reported at 675 crore, which grew by 17.4% YOY. However, the EBITDA margin reported at 7.9%. The stock is trading at a PE of 21.4 times to TTM EPS. There is an update from Camlin Fine Chem Limited. The composite vanillin manufacturing unit situated at Dahej has successfully commissioned its commercial production from 22nd January 2023, and this is positive for the company. Thank you.
Reliance also reported numbers, and numbers were ahead of expectation, marginally ahead, mainly on account of O2C business, wherein the EBITDA came higher than expectations. The EBITDA came in at around 13,900 crores versus expectation of around 11,000 crores. So that has boosted the overall EBITDA. But apart from that, Geo was more of in line or marginally better, but retail has shown declining trend. Now the growth is slowing down in this quarter. The sales per square feet has come down to around 9,980 versus last quarter 10,586, and last year 12,664. So that is coming off sharply. The increase in the retail space was substantial, but that was not getting reflected into the sales, and sales is showing some slowdown, which is also being seen in other company like we had seen in Avish D-Mart as well. Geo ARPU has come at 178.20 versus expectation of 179. Last quarter 177, and year on year 151. And subscriber base has increased by around 1.2% quarter on quarter. So overall seems Geo in line, retail lower, but O2C business has shown higher trend. As such, the EBITDA has shown higher for the consolidated company. But what we see that the valuations for Geo and retails are higher than now O2C business. So market will not take much lead from a marginal ahead of expectation result of the Reliance Industry. Then the results for 25th, I'll run up fast because we are already late. So Amara Raja battery is likely to report numbers. Numbers are likely to be okay set of numbers. Wherein Arvind Mill is also likely to report flattish margin quarter on quarter and likely to be okay set of number. Bajaj Auto, we already know that the volume has come off very sharply in this quarter, but that is already known fact. Now the market will be looking at the margin, and margins are likely to remain flattish quarter on quarter at 17.2%. Then C8 is likely to report numbers. The numbers are likely to show improvement with margin expanding from 7% to 8.4%, but it will still be lower than their normal margin of over 10%. So not very great positive for C8. The stock has already seen enough in expectation of higher results, but the results are not to that up to the mark. So, and Cipla is likely to show improved result, wherein the revenue to grow by 13% and EBITDA margin also likely to expand both quarter on quarter and year on year. Then Dr. Reddy is also likely to show improved set of number, wherein revenue likely to grow by 14% and year on year sales is like EBITDA is likely to grow by 25%. The Jyoti Lab is also likely to show improved result, wherein revenue is likely to grow by 14% and EBITDA is likely to grow by around 20%. Then Tata Motor is likely to report numbers wherein we are likely to see improved set of number mainly on account of GLR. Now EBITDA margins are quarter on quarter expected to improve from 7.8% to 10%, and revenue is also likely to increase by around 5% quarter on quarter. So Tata Motor can see a positive trend. Then Torrent Pharma is also likely to show improved result, wherein revenue to grow by 15% and EBITDA to grow by 33% year on year. Then Tata Elxsi is also likely to report okay set of numbers. So these are the numbers which are expected on 25th of this month. I'll request commodity team to take up from here.
Hello, good morning, everyone. Today, commodities are likely to trade positive, and it may continue. Gold, one can buy around 56, 650, 600, and maintain a stop loss of 60, 40, 60, 56, 450. On higher end, there are chances of testing 57,000. 57,100. Silver also looks positive above 68,500. So one can buy with a stop loss of 68 500, and one can expect prices to test 70,500, 70,700. So buying in silver is recommended at the current price also. Uh, crude oil momentum is positive, and prices are likely to test 6,700. So buying around 65.70 and maintain a stop loss of 6,500. Metal prices have opened gap up and may continue to remain positive. So buying in copper is recommended around 778 and maintain a stop loss of 773. On higher end, prices can test 790. Aluminum also looks positive. So buying in aluminum is recommended, and prices are expected to test 223. Buy with a stop loss of 219. Zinc prices are heading towards 300, and one should maintain a stop loss of 295 and buy for the same target. That's it from me. I'll ask Riya to take over from here.
Hello, good morning, everyone. So on the currency side, we are seeing a decline into the dollar index towards 101.65. It has again retreated below the levels of 102. If you look at the current market sentiment, I think the market sentiment is currently more focused on what the Fed is going to take its stand towards the upcoming FOMC meet. The expectation is it can go softer. The expectations of the rate hike has even come to 25 bips rather than a hike of 50 bips. So that is what we are seeing into the dollar index as well. If you look the oil on the oil part, like so said, there is no major upside momentum that is happening in the international oil market, and the demand still remains muted from China. So all these factors are working in the court of USD INR, and we are seeing quite a appreciation happening. It is right now trading at around 81 levels. So on the technical part, any bounce back should be a opportunity to go short into the pair for a target of 80.60 levels by keeping an SL at around 81.25. You could see some upside momentum happening into the Euro INR, so you can go long into the pair above the level of 88.35 for a target of 88.48, 88.65 with an SL at around 88.10. Pound could also test the highs of 100.90, 101.20 in today's session. So you can go long by keeping the SL at around 100.40. JPY-INR could remain on the downside. 62.53 is the support into the pair, whereas 62.90 is the resistance. So it could move within this range. So that's all on the currency front. Thank you.